This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices settled more than 1% higher on Friday and recorded a weekly gain in low trading volume ahead of year-end, buoyed by a larger-than-expected drawdown from U.S. crude inventories last week. Brent crude futures rose 91 cents, or 1.2%, to settle at $74.17 per barrel. U.S. West Texas Intermediate, WTI, crude futures rose 98 cents, or 1.4%, to $70.60 per barrel. U.S. crude oil inventories fell by 4.2 million barrels in the week ended December 20th as refiners ramped up activity and the holiday season boosted fuel demand, data from the U.S. Energy Information Administration showed on Friday.
U.S. crude stocks drew down more than expected on strong refinery runs, while distillate inventories fell thanks to higher truck traffic during the holiday season and cold weather, data from the Energy Information Administration showed on Friday. Crude inventories fell by 4.2 million barrels to 416.8 million barrels in the week ended December 20th, the AIA said, compared with analysts' expectations in a Reuters poll for a 1.9 million barrel draw. It's a supportive report. You got good demand from refineries for crude and strong driving, said John Kilduff, partner at Again Capital in New York, cautioning that driving demand was likely to decline after the holiday season.
Moving on to the top news in the energy sector.
Turkey aims to provide electricity to Syria and strengthen its power infrastructure, Energy Minister Alparslan Bayraktar was quoted on Friday as saying, adding that Ankara may also work with Syria's new leadership on oil and natural gas. After backing the Syrian rebels who toppled President Bashar al-Assad this month after a 13-year civil war, Turkey has emerged as one of the main power brokers in its southern neighbor, and has vowed to help rebuild the country. Ankara was one of the first countries to reopen its embassy in Damascus, while its foreign minister and intelligence chief both met with Syria's de facto leader Ahmed al-Sharaa there.
Major European energy companies doubled down on oil and gas in 2024 to focus on near-term profits, slowing down, and at times reversing climate commitments in a shift that they are likely to stick with in 2025. The retrenchment by oil majors comes after governments around the world slowed the rollout of clean energy policies and delayed targets as energy costs soared following Russia's full-scale invasion of Ukraine in 2022. Big European energy companies that had invested heavily in the clean energy transition found their share performance lagging U.S. rivals Exxon and Chevron, which had kept their focus on oil and gas. Next, we have the top news in metal markets. India on Friday extended its mandate for imported coal-based power plants to operate at full capacity until February 28, a government circular showed. In October, the government had invoked an emergency clause to direct companies including Tata Power, Adani Power and Vedanta to operate their imported coal-fired plants till October 15 and had further extended the mandate till December 31. Imported coal-based power plants in India have a combined annual capacity of nearly 16 gigawatts. India's coal-fired power output had fallen for a second straight month in September due to slower growth in electricity use and a surge in solar generation.
Gold prices slipped on Friday as elevated U.S. Treasury yields dimmed non-yielding bullion's allure in a holiday-thinned week, with markets focused on President-elect Donald Trump's return to office and the potential impact of his inflationary policies on the Fed's 2025 outlook. Spot gold fell 0.6% to $2,619.33 per ounce, as of 1:41 p.m. Eastern Time, 18:41 GMT. Bullion has lost 0.1% this week. U.S. gold futures settled 0.8% lower at $2,631.90. Treasury yields are a little bit higher here, and gold will remain under pressure through the end of today. We are here in a thin holiday market, said Bob Habercorn, senior market strategist at RJO Futures.
We will now look at the top news in the agricultural sector.
U.S. corn futures hit a 6-month high on Friday on stronger than expected weekly export sales data and supportive chart signals, analysts said. Wheat rose on brisk export sales, a softer dollar and bargain buying after recent lows, while soybean futures sagged as traders anticipated large South American soy harvests. As of 1:05 p.m. Central Standard Time, 19:05 GMT, the benchmark corn contract on the Chicago Board of Trade was steady at $4.53 minus 3/4 per bushel, pairing gains after reaching $4.55, the highest on a continuous chart of the most active contract since mid-June.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.